There are two very important factors to consider when you're doing real estate professional status analysis. Two. One is material participation, and the other one is hours spent on each property. So if you're materially participating, like Stu material participates in my business as my minion, bookkeeper one, bookkeeper two. Material participation means that he is spending more time on the real estate business than you are doing anything else. So if you're a doctor, a lawyer, accountant, you're spending 2,000 hours, you got to be spending 2,001 plus hours on real estate to be able to say that you material participate more in real estate than you do on any other industry. Otherwise, you're an investor, a passive investor. Number two, you have to spend 750 hours on each property to be able to say that you are actively managing the property. We'll talk later in other videos, what is managing property, what is the hours, what kind of hours count, but 750 hours. Now, what happens if you have 5, 10 properties? Well, you can make this election to group them all together, and then you can do 750 hours on all the properties, but that's an election. There's pros and cons on that, but that's usually what you do if you have multiple properties. If you have 2 properties, maybe 750 times 2, it's actually doable, maybe 3. But once you start getting more than 3 or 4 properties, you really got to group it if you want to be able to say you're a reps person. And of course, the whole point of being reps is that if you have losses, if you do a cost segregation study, you can offset that against other active income like a W-2. Maybe you have a spouse, a doctor, a lawyer, that they have all this money, and when you're married filing joint, you can take your real estate professional status losses and offset them. But those are the 2 things you really got to make sure you got down pat, because if you get audited, the IRS is going to ask for those things. Proof is in the pudding, documentation. Get your minions to do all the documentation together so you have it. You don't do it when you get an audit. You got to do it throughout the year, just like any other type of thing that you need in the IRS world. When you're doing business and you're deducting things, documentation and substantiation is everything. You can hire little minions to get it all together. You can, and you should probably. You can do it yourself. Remember, real estate professional status is a great tax strategy, well used and also well abused. So if you need any help with all this, you just reach out to us. Our minions will reach out to you, and we will be real estate professional status gurus. Gurus, yeah, real estate, yeah. Over and out. Have a great day.